Hello and welcome everyone. Let's get prepped for the FOMC meeting, which is coming out tomorrow. And let's jump in and talk about what's up. So as we look at the calendar, tomorrow, 2 p.m. Eastern Time, the FOMC meeting, the statement is released. Now we know that they're expected to keep rates unchanged, and that is not going to be a surprise to the markets. They are 100% keeping rates unchanged. The question mark for markets is really what happens to rates from here. We came into this year expecting the Fed even gave guidance for multiple rate cuts in 2024, and now all of a sudden we're seeing inflation stay sticky. We're seeing the economy doing fine. And that drive for the Fed to risk losing inflation again and to start cutting rates, it just doesn't make sense. And we talked about that here at Maverick, that look, the market expecting all these rate cuts, it just doesn't make sense. The Fed screwed up inflation so bad in the first place, they didn't start raising rates until inflation was all the way up over 7%. They waited way too long. And so, can they risk cutting early before they know that inflation is back to a reasonable number? Right now, we're in the 3 to 4%. That's twice what their expectations and what their goals are for inflation rates. So, anyway, make a long story short, it's not going to be a surprise that the rates are going to stay the same. It's all about the statement and the press conference afterwards. Do they give any guidance as to what the future holds? Are they looking to cut rates later this year? Do they still think that's probable? The market's even flipping kind of a 180 and wondering if the next move from the Fed is actually going to be more rate hikes. So it's quite a change in markets' expectations for rates, and we're seeing that drive equities and drive other assets sharply lower today. So let's jump over and take a look at those charts. Now, we talked about this S&P chart yesterday in the currency recap, that we had come right up underneath that 2050 crossover, and this was an important area. Do we break higher? Do we break lower? It's clear to see that today we broke lower, and that downtrend persists. We're already in a downtrend, right? 20 cross below the 50, and they're selling this market off and selling it off sharply. Now, tomorrow we come into the Fed. My expectation would be kind of a sideways chop until we get the Fed announcement. So it's probably going to be bouncing right here in the 50-40s, and then the Fed meeting announcement, and that can drive the next leg of volatility a bit further. Let's look at some other assets and get prepped for the Fed meeting. Well, with markets driving sharply lower, the Japanese yen just basically stayed sideways. So it wasn't as much of a currency play as it was equities. If we look at the US dollar, big bounce back, huge rally. And again, this is that 180 flip where all of a sudden the market said, hey, but wait a second. Is the Fed ready to raise rates? And there's these rumblings about stagflation and some other factors. Now, stagnant economy and inflation still running high. That would be a big problem for markets. That would be a big problem for the Fed. You can see that the US dollar rallied sharply today ahead of the Fed meeting tomorrow. Looking at the Swiss franc, not a lot of movement. Euro, bounce back, certainly big surge back to the upside. We've been basing in the euro for multiple weeks, so this was a big bounce back and recovery. British pound continues to be strong. We've liked that. CAD had a nasty reversal a couple of days ago, and I still wouldn't trust that one as much. Aussie, a bit of a give back day, but notice we're still in that upward trend. And then the Kiwi failed against its 50-period moving average. This was going to be that kind of key level. Can we break through there and get this trend turning? The answer was no. So looking at pairs to trade, Kiwi still looks bearish. It still looks weaker in terms of its chart. Canadian dollar had an ugly reversal, and it could still be considered as well. And then obviously the US dollar right back up near the highs. The euro and the pound breaking to new highs or right up against those highs. So if I were looking at currency pairs, I would be looking to buy the US dollar in Uh, it's in terms of the Fed meeting, I think the Fed's not in any hurry to do anything with rates, and that should be the message that they portray. That basically should be the message where they say, look, we're going to be data dependent. We are not in a hurry to cut rates. We need to make sure that we've got inflation beat. That messaging is probably not what the markets want to hear, but it should be pretty good for US dollars. Let's look at a couple of these pairs together. Here's dollar CAD. Like we said, nice recovery. You'll probably get a little chop tomorrow, but I would look at dollar CAD and think that it should be going right back up towards those highs of 138.40. So from current prices, that's a good 60 pips higher. Let's look at Kiwi USD. Here we would be looking on the short side. Again, I think it'll chop around here around high 58s, maybe even touch 59 tomorrow, but should be going right back down to 58.40, 58.30, 58.20, going to new lows. So playing the US dollar to the upside against the Kiwi, against the CAD, those would be the pairs that I would be looking and most interested in trading on the Fed meeting tomorrow. Just out of curiosity, we could also glance over at some of the commodity charts. You can see how gold sold off. We've talked about how commodities are struggling right now, oil selling off. And then if we go to the cryptocurrencies, really ugly trading session, broke to new lows in Bitcoin and in Bitcoin Cash. Ethereum down at the lows, and Litecoin not quite at the lows. So, but still, crypto, we talked about it in the currency recap, that's also downward trending. Right now, the dollar looks like today was a key day. It was a reversal sharply lower in equities. It was a reversal sharply higher in USD and Euro and British Pound. And those would be the currencies that I'd expect to continue to chug along to the upside. So we'll look to buy weakness in those currencies for the next few days, unless, again, the Fed throws some major change up, some curveball, something to throw us off. It's probably just status quo, and they've got to get inflation more under control, lower levels, and I think they're going to be on that message. Hope you enjoyed this FOMC prep video. Have a great week, everyone. We'll see you next time.